Welcome back. Building on our discussion of ESG strategy and corporate leadership, this session looks at climate ambition across Asia. We are joined by Justin Wu, the head of climate change Asia Pacific at HSBC. This role, Justin oversees the development and implementation of the group's climate ambitions across the region. He serves as the senior expert and ambassador for HSBC on climate change in the Asian context, leading engagement with the bank clients, regulators, and other regional stakeholders. Justin will share how policy shift, green finance, and technological innovation are driving industry transitions and how businesses can seize emerging opportunities. He will be joined by Dr. Hezri Adnan from CGM, who will be moderating the conversation. Now, let's welcome Justin Wu and Dr. Hezri. Over to you.
Thank you, Jetian. Good afternoon, distinguished delegates, ladies and gentlemen, to the audience who have just joined the CGM Global Summit, welcome. This is actually the first panel session for today, and our focus for the next 45 minutes is on climate ambition. Why we are having this discussion is that 10 years after Paris, I think it's very important to take a step back and take stock of where we are in the story of climate ambition. When the Paris Agreement was agreed by the head of states in 2015, many countries pledged to limit warming to well below 2 degrees Celsius, ideally 1.5 degrees Celsius. And since then, ambition has grown dramatically to one point whereby we had about 90% of the global GDP is covered by some form of net zero pledge. But the picture is hardly even. In fact, it is very much in flux now. In some parts of the world, we have political headwinds slowing down the momentum, and we see some governments rolling back on renewable targets and also in driving carbon regulations. But Asia is a different story, as we've heard from a number of panelists earlier today. Last year, China installed more solar capacity than the rest of the world combined. And India now runs the world's cheapest solar parks, for instance. And ASEAN countries, where about 700 million people reside, we have launched many green taxonomies and experimenting with carbon markets. So how do we make sense of this contrast? Ambition under siege in some places, yet they are prospering here in Asia. We are privileged here to have with us today Mr. Justin Wu, who is the head of climate change Asia Pacific at HSBC. He will bring with us a valuable perspective from his vantage point of being working at the intersection of global finance, regional policy, and business strategy. He has spent more than 15 years shaping conversations on energy, climate, and sustainability. To structure our discussion, we will sort of revolve around three themes. One is leadership and governance. Second is on financing the transition. And thirdly, on perhaps lessons and opportunities from Asia's bright spots, if we have the time. With this in mind, I'm delighted to bring to you Justin Wu, who will be sharing his perspectives. Justin, we look forward to hear your insights on how Asia can turn climate ambition into competitive advantage. The floor is yours, Justin.
Sure, Dr. Hezri, thank you so much. And actually, I really want to also just thank Climate Governance Malaysia for convening this conversation today, and also for inviting me to be a part of it. I'm actually still in the US right now, having just attended New York Climate Week. So I can truly attest that this is a very global conference here. We have speakers and I'm sure attendees actually from around the world. So it's really, really great. Actually, I think, Dr. Hezri, I think what I'll do is maybe I'll just give a bit of an opening remark, share some reflections from where I sit right now, actually having been in the US for the past week. And then I think it will be great to go through the three areas that you mentioned before. Normally, I think for some of you who probably have heard me speak before, I do like to use slides and go through a presentation, but for the first time today, I actually don't have slides, so this is going to be conversational. But I just want to maybe reflect on a few points from some of my fellow presenters from earlier today. I really thought what Ian said at the very beginning about speaking truths is particularly important at this time, because as we know, it's exactly as you pointed out, 10 years since Paris, we've had a lot of progress since then, a lot of ambition, a lot of enthusiasm. The conversation, recently has become a little bit more muddled, right? As things, as even as it seems like things are accelerating, and it seems like things are actually becoming more real, so to speak. But there's a lot of now, I think, information and misinformation out there. So I think the idea of that, we as climate professionals need to be out there speaking truths is really important. So I'll return to what exactly that means in a moment. And I said I didn't prepare a presentation, but if I did, I probably would prepare one very similar to what Ian and also Ali Izadi did earlier. Ali's actually a good friend and former colleague from Bloomberg NEF, so I do understand a lot of the research they produce, and I think I fully agree with many of both of their perspectives. And it's actually quite important for all of us to pay attention to all of that, because these are really the so-called real economy trends that really matter, right? Where is actual capital investment flowing? What are businesses actually doing with regards to their transition plans? And what do we, when we go talk to our clients, right? What do they actually really need to know to understand what's happening in the real world and how to navigate this? Just a few words, maybe about what myself and some of you might actually wonder, what does a regional climate officer for a global bank actually do, right? And how, and sort of what perspective am I coming to this from? One thing that I think is really important, and I hope that many of you, who are attending this webinar today will also share, is that we do need to understand actually the trends globally, cut through some of the noise, and again, look at data, look at evidence, look at actually what is happening. The other thing, so that's one thing that I spend quite a bit of time doing and trying to keep up with what's happening. The second bit is to make sure that that I provide, or my colleagues and our team provides a regional input into our HSBC group climate strategy, right? We have a net zero ambition by 2050. We've set a number of commitments around sustainable finance and investment. We have interim targets around finance emissions that we set around 2030. We talked about embedding this within the bank, supporting our clients on that transition. But all of that, is theoretically very important, and something that we and many of our peers have adopted. But of course, we need to match that with what's actually happening in reality on the ground. So providing that regional Asia Pacific to all of that is another thing that's quite important. And then I think the third part is something I've been sort of hinting at, but it's really to highlight the importance of Asia in the energy transition, right? And I think that's come out in a couple of the remarks and presentations from earlier today. And actually, having spent a week in New York, this has become more stark and more important to me than ever before. Is in some ways, Asia has now become almost the center of the global energy transition. And in some ways, we may be even a little bit behind or shy ourselves in admitting that in some ways, right? So maybe it's time to think about how we can actually shape a conversation from this, from our part of the world in terms of the actual things that are happening. And why do we say that Asia is now at the center of the global energy transition? Well, again, you heard a lot from, I think, a couple of the presentations and speeches earlier this morning. But there's a couple of numbers that I would just want to highlight again, because I think it's just really important. One is, and this is from Ali's presentation, is energy transition investment is at a record high, right? So in spite of what everybody's saying, it's a record high last year, and it looks like it's going to go on the record this year. Over $2 trillion, half of it is in Asia. And I think according to the IEA that this is over, so what is being invested in the energy transition is almost two to three times more than what's being invested in fossil fuels. So clearly this trend of, actually adding more renewables and transition technologies to meet our future energy supply, demand rather, particularly here in Asia as a rapidly growing region, this is increasing, right? So this answers this question that we always ask, can we have economic growth? Can we meet all this energy demand that we see from these rapidly growing economies in our part of the world. Can we meet that with new technologies? And the answer is absolutely yes, and that's already happening at pace. The second point is that we talked about, I think Ian mentioned this a little bit earlier as well, is we talked about the importance of clean electrification as key to an energy transition, right? Simply using electricity to meet your demand, whether that's air conditioners, electric vehicles, heating, or now AI data centers is a major driver of demand. This is already efficiency, right? This is already better than simply, let's say, combusting fossil fuels. And in this front, the so-called electrification of demand, we see that actually both ASEAN and China are now ahead of the US in electrifying their final energy demand. Actually, about a quarter of all emerging markets are now ahead of the US in electrification of demand, including Malaysia, by the way. And Malaysia is at almost 26%. I think I looked up this number this morning. 26% of its final energy demand is met now with electricity, which is ahead of a number of OECD countries. So this goes to show that even though we have rapid growth in our part of the world, this is not the same development pathway that we see in other parts of the world. And then I think the third really interesting data point perhaps is something that you might have seen in the news. It's actually what's happening in China. We talked about China a lot, but one data that came through here is that emissions, at least in the last 12 months, seems to be off by about 1% in China. So it's peaking and then slowly, coming down. So, maybe it's a little bit premature to say that China has reached a carbon emissions peak 5 years ahead of its stated 2030 target. But, if this is true, or even if things kind of move up and down a few percentage points in the next couple of years, is quite dramatic, because this means that actually the world is now actually turning a corner, right? Now, this is nowhere near where we said about our climate ambitions, about the reducing emissions by nearly 2/3 by 2030. But at least now we're turning the corner and moving in the right direction. So, I think this data just goes to show that, look, even with all the things that are being talked about today, all the noise, the data is showing that all the trends are moving in the right direction. And then if you further take another step and actually look at the pledges and as their targets of private companies, they all remain, right? Some things maybe have been discussed a bit, but more or less the heart of all the climate commitments from all the companies are still very much intact, right? Even though sometimes they may be talked a bit differently. So I think it's just really, important to understand this and to see that, this is still very much happening. And the last thing I do like to say is that, I think in the last 5 years or so, we had a lot of, we've made sort of the topic of climate sustainability a lot more mainstream. And it's been a great thing because, we have very passionate people now coming into the field. I speak to a lot of, actually, a lot of students now are very interested in studying this field and getting a career in it and coming in. So there's widespread public interest in this topic. But as a result, actually, it's still up to all of us as professionals to remind everybody that this is very much a long-term project, right? It's not a thing for a couple of years and then we move on to the next thing. Our targets are multi-decadal. They require entire transformations of national economies. Doing this is essentially developing your future business or your national economic development plan. So these are very consequential topics that will take us a very long time to work through. So I think that's also really important to remember that along this very long path, there's going to be twists and turns and things happening, but we must not sort of abandon that, obviously, right? We must continue with this long-term project that, well, more than project, but this long-term ambition that we all have.
Thanks, Justin. Thank you for bringing that optimism. If you lay the whole world on a map on an A4 size paper, you will see that 4 billion people, we have 8 billion people living on the planet now, 4 billion, about half of them actually living in the Asia and Pacific region. So it's actually, as you put it, Asia is pretty much, a central story in this transition, move towards transition, energy transition. And you have the rest of the world. So it's very encouraging to hear that we are now taking this leadership. But Asia is also a very, very diverse region, right? I mean, you have on one hand China, who's driving much of the technological drive, and you have India on the other side. Can you comment on the different strengths of the different countries in Asia beyond these two?
Yeah, it's a very good question, right? So obviously Asia, being based in Asia, we always need to remember that Asia is not one place. It's not monolith. It's very diverse. It's very different. Um, I think the China story is been talked about a lot, right? China is home to, on the one hand, it is the largest investor in sort of clean energy and the energy transition technologies. It's also deploying the most. It's also, captured a lot of the value chains of climate technologies. So it is very unique. In some ways, it's almost that it's sort of raced ahead of almost everyone else in that regard, right? And other parts of Asia, I think, also have very strong positives that we need to kind of acknowledge as well, right? Whether in India they've run very successful auctions, very competitive market auctions that have brought down the cost of renewable energy. They have not scaled it at the same level as China, but actually the amount they have put in is also quite remarkable, right? So in some ways, I think that's also to be acknowledged. I think Ali Azadi mentioned earlier about what happened in Australia, a liberalized power market, with very good policies, resulting in a huge uptake of renewable energy that's really continuing as well. And then, of course, I think when we look at ASEAN or Malaysia or just Southeast Asia in general, traditionally, I think the view has always been that ASEAN has been a bit of a laggard, in some of these respects, right? A little bit slower to pick up these technologies. But if you look a little bit closer in just last 2-3 years, a remarkable amount of activity has actually happened in the region, right? So deployment has started to increase. Just in Malaysia alone, in the last 2 years, I'm no expert in this. I think many of you know this really well, but the raft of different policies. The former minister also mentioned this as well, right? The number of policies starting from the National Energy Transition Roadmap, addressing carbon markets, something on CCUS this year. There's been a huge number of a flurry of activity almost happening as well. So I think I still remain quite optimistic about what's happening across Asia. It's been a little bit uneven for sure, but I see that actually we have seen a growing amount of progress happening in different parts of Asia as well. And then I think the question is, okay, how do we leverage China, right? It is it's a little bit different when you have climate technology because it's not like a fossil fuel where you have to actually constantly import it or buy it every single week. When it comes to climate technology, it's actually infrastructure, hardware, things that you can invest, things that you buy and can use for a much longer period of time. Gives you, potentially gives you a lot more energy security, for instance, right? So again, I think it's maybe for other countries in Asia to think about, okay, how can we leverage really affordable climate technology that's coming from China now, right? Rather than just be sort of dismissive of it, but actually how do you actually leverage that to your own national economic advantage?
Yeah, and there are channels for that to happen, right? You have sort of regional architecture for that cooperation to happen between countries in Asia. If we can move now, Justin, from regional perspective to spoken about the sort of national variations at the firm level. You have this privilege of having interacted with the board members and leadership or C-suite leadership in many companies. How do you see the role of board and management teams in signaling the urgency of climate action beyond just reporting? Because of course, with the new reporting baseline being established, the IFRS S1 and S2, a lot of focus is on reporting. But beyond that, can you comment on that? How do you bring the board and C-suites into the conversation?
Sure.
Yeah.
Sure. It's a very good question, right? Yeah. I think, look, obviously, I think to zoom out a little bit, right? The role of the board and the management team is really to send a firm-wide a signal about the the urgency of climate action, right? Since we made our commitments, and I'm sure this is the case in many of our peer banks and other corporations, one of the measures of how well you potentially carry out these commitments and how serious and dedicated you are to them is to make sure that your board and your management team is involved in a very formal way, in the sense that the board needs to oversee the implementation of this, right? So I think that's actually just critically important. Of course, there's a number of ways to do it, and there's many a lot of literature written on the best practices of how you embed this in board. But obviously the role of a board overall for a company is to oversee and provide sort of good governance to the company. So when it comes to a commitment as important as climate commitments, this has to be one of them. The other thing I would just say is that yes, there's you can talk about capital allocation, risk management, but really what we need to ultimately see, I feel in this area, is an alignment between business strategy with your climate strategy, right? There's almost no point in having a business strategy and then saying, okay, look, all right, now we're going to look at our climate strategy and see how it sort of latches on, right? Ideally, they should be aligned. This should be how your business operates and thrives in a net zero world, in this direction that we're moving. How does it take advantage of these new technologies? So, as an example of what we're doing within the bank, and I'm sure, again, this is not a secret sauce or anything, because I know our peers do something very similar, is to look at the commercialization of our sustainability agenda, essentially, right? We feel that it will be, in the long run, sustainable and scalable within the bank if we can help our clients also adopt this agenda, but also build successful businesses around us. So how do we do that, right? How do we engage our clients to do that? How do we commercialize this opportunity? How do we embed this within the bank? How do we just make it one strategy, right? Not a separate climate strategy, whether it's within ourselves or with our clients. And that's, I think, a mark of success if we're able to just make it, in some ways, join them up to make it one.
Is that's interesting? And when we said combining climate strategy and business strategy, is that something that can be sort of scale up? As opposed to bank by bank to a client sort of arrangement. Is there already successful stories out there that you can share, perhaps, where this has been scaled up?
Yeah, I think look, I think many of us within the banks, at least the major global banks, regional banks, have been doing this in some form or fashion over the last couple of years, right? I think in the beginning, everybody was, made very ambitious commitments. And then, there was not a lot of alignment within the industry to figure out, okay, how we're going to do them. But of course, then, standards came and sort of different groupings came to sort of help us make these alignments and make these commitments. But now I think many of us, within at least the banking area, but I would say also increasingly in other corporates, are becoming a bit more sophisticated in sort of embedding this within our strategy, right? Look, I mean, I think one maybe I don't know if it's an example, but maybe one way to illustrate this is actually within banks. A lot of banks have actually started looking at client transition plans, or actually help clients build transition plans, right? So the theory is quite simple. So if most countries still have a net zero commitment, most companies do as well. So that's a commitment, but then you need a transition plan, which is actually illustrating how you're going to achieve that commitment, right? A net zero transition plan essentially is, okay, how are you going to move from A to B by that time that when you have set the commitment. So one thing that we, and I think many other banks do, is actually have a conversation with our clients about their transition plan. What are your what do you need? What kind of help do you need actually to achieve that, right? Sometimes it might be policy regulation, which we as a bank may not be able to help as much, but as part of the ecosystem, or maybe to spread the word, we can help assist sort of indirectly. But if it is, let's say, financing needs on sustainable infrastructure, or whether it's labeled or unlabeled, whether it's kind of helping them scale a new technology, whether it's to find a partnership, etc. Right? These are sort of things that maybe we can actually play a bit of a role within a bank. So engaging in client transition plans and actually helping them get from A to B is I think an illustration of how we essentially make sort of make our commitment and plan as part of sort of business as usual, right? As part of just a client conversation, which is something that every bank obviously needs to keep talking to their clients to figure out, what they want to do and how we can sort of support them to do what they want to do.
That's really really proactive in encouraging client to look at or to work with them to develop the transition plan. There is a case in China in the city of Huzhou, which the government has even made it even easier for companies to fill in a kind of a very checklist type of approach to developing climate transition plan. So there are examples out there. Justin, now since we've started talking about transition plan, as someone who's been with the financial institution for many years, we always hear that we need trillions for the capital to move into this space. And is this happening in a way that you envisage it to be, or what are the challenges and what are the sort of steps needed to really bring it up to speed?
Sure. Yeah. I mean, I think there's always a half empty, half full conversation to this, right? So again, the number of that we heard earlier is about $2 trillion in energy transition, right? Which is a lot. It is in the trillions, but there's sort of two challenges with that. One is that yes, it's probably not enough for us to do everything that we want to do, or for I guess for a climate professional, it's never enough. It's never fast enough. Yeah. And secondly, of course, there's still a distribution issue, right? 40% of that went to China actually, which is great for decarbonizing China, but the rest of the world obviously needs a lot too, including emerging markets. So there's always there's always this bit of, okay, even though it's growing, we could always use more. We need more to move quicker. But also, it needs to get to the right places. And then, if you break it down to different projects and where you'll find that, it probably never quite matches the supply and demand that we want to see, right? For instance, maybe it's not going to certain emerging markets. It's not going, not enough of it is going to certain technologies. I think one thing we heard, for instance, an example of Southeast Asia is that while a lot of progress has been made in this area, the region is simply growing very quickly in terms of electricity and energy demand. It needs a lot more investment in clean energy, and needs a lot more investment in infrastructure like power grids and other things to support it. Now there's, as we have growth of for instance, data centers, et cetera, it's even more of that, right? And probably that's not enough. In some ways, I think for a financial institution, we're always in a lot of conversations on how we solve this, right? So there's the common discussions always that we have is, okay, how do we try to crowd in more private capital, whether it's in climate technologies that are too sort of risky for commercial banks to finance today? How do we sort of get more catalytic financing, or how do we get a bit of sort of maybe even philanthropic financing, right? To kind of to kind of shield that a little bit in climate tech. Or the other one is that actually often banks sometimes struggle with is infrastructure, because infrastructure is long duration lending with relatively lower returns, but your money is locked in for a very long period of the asset, right? So that's a discussion of, okay, how do we can finance that, but then we need to distribute that debt to a different type of investor, for example, that can hold on to it over 20, 25, 30 years, wherever long they need to. So there are definitely ways of doing this. I think maybe one thing I will say, and we can go on this topic for quite a while, is in some ways what we must remember is that in order for all this to work and for us to reach the scale that we need to reach, commercial banks need to just be fine with it, right? In the sense that if we really want to scale a particular technology, we need to make sure that people don't see it as anything special or more risky or than anything else, right? Because there's only a limited amount of catalytic capital or blended finance, et cetera, for special projects. After a while, you have to make sure that actually we could just go ahead and do it on a quote unquote normal basis, right? So some of the work that actually we do within the bank, me and some of my colleagues, is to figure out, okay, how do we make a particular project or a company or type of project or type of technology, for example, how do we make it commercially bankable, right? So that it doesn't require some sort of special treatment, for example. That way, then it can be easily replicated, it can be scaled, et cetera. Then that can sort of move in the right direction.
I'm looking for questions in the Q&A, but none seem to be coming in. I'm sure we will have a few in the next few minutes. Since we've started with that comparison, Justin, if you can comment a bit on the role of sort of a better interaction between public and private sector. We often hear in some of these lagging markets, if you like, that the policy and regulation actually behind market needs. And in your experience, how can the private sector lead responsibly when policy frameworks needs to catch up? Any insight from that?
Yeah, sure. Well, I think the private look. I think it is really important for private sector to in some ways lead or to remain ambitious and set targets. And as I said, I think in most cases or nearly all cases, the private sector has, whether it's financial institutions or corporations, have kept their ambitious climate sort of commitments or net zero commitments, and in some cases have even increased the ambition. So I think that's really important because it creates essentially a signal, whether it's to the public or to society or actually more importantly to regulators, that companies, real businesses, right, for-profit businesses, take this very, very, very seriously, and therefore need the obviously the support of regulation and policy to achieve its goals. So I think that's really important for private sector to kind of send that signal to regulators. But on the other hand, of course, we know that the influence of the private sector can be limited in some cases, right? Where we cannot, change policy. We can offer views and opinions about what we'd like to see, but we cannot, we're not, policymakers make policy, right? So it is up to the policymakers, of course, and governments to make sure that there is an enabling environment that we can, that can support the ambitions of the private sector. So I think an easy one example that often gets cited is access to clean energy, right? Again, you saw some data earlier about how many of the technology companies, despite sort of being in a race to build data centers and becoming huge consumers of energy, still have fairly ambitious targets for net zero power procurement. But they can only hit those goals if the places where they're building those data centers or building that infrastructure actually allow them to gain access to clean energy or actually have policies that will scale up the supply of clean energy, right? So there's a certain amount that the private sector can do, but at the end of the day, I think that obviously the governments and regulators have to make sure that there is the right enabling environment for this.
Justin, you're still in New York, and I mean here outside of New York, we are still reeling from the recent statement at the UN General Assembly, and I wonder, what are the kind of conversations you have when it comes to sort of private sector sentiment when it comes to such strong message coming from the the leadership of the United States.
Yeah, I mean, I think unfortunately, I think that gets the headline, and then the thousands of other conversations at New York Climate Week probably don't make it into as nearly as many headlines, right? I mean, look, I would just simply say, going back to some of the basics that we've been speaking about all morning, is that look at what's happening in the real economy, right? Look at the amount of investment that's taking place. Look at the technologies that are being deployed, the transformations that are happening, along various industries. So we can talk about it different ways. We can call it different things. Again, I think now more than ever, it's maybe up to many of us who are in this climate space to sort of speak to truths, right, and sort of reiterate the key messages. I think that's really important because well, look, I mean, if we don't do that, then I think that the message can easily be lost, or the progress can easily be lost in a lot of other in the conversation.
Thanks, Justin. There is one question addressed to you here. How do you see leadership and governance frameworks in the financial sector evolving to ensure that climate finance not only mobilizes capital at scale, but also drives accountability and real impact on the ground, especially in emerging markets like Malaysia, where the balance between growth and decarbonization is so delicate? Justin?
Yeah, look, I think again, I would maybe just sort of slightly, well, not slightly, but I would maybe just on one hand say that can we look at growth and decarbonization at the same time, rather than looking at thinking about it as sort of a trade-off or one for the other, right? I think it's, the evidence shows that clearly we can achieve growth and decarbonization at the same time, right? The development path that a country like Malaysia or any sort of emerging market follows today is not going to be the same that was followed by Europe or the US 150 years ago. Essentially, they were using steam engines and using coal, on a much larger and much more inefficient scale than we see today, right? Or even the path that China took about 30 or 40 years ago, which, along its own development, right? Now we have a different set of technologies that are actually cleaner and much more efficient, and also more cost effective in many cases, right? Can we sort of deploy and employ that at scale for this? So I think that's really important. And of course, I think whether it's banks or investors or companies need to need to keep that in mind, right? That as we support our clients and others to sort of as we raise capital to help them achieve their business plans, is that the best? Are they using the best technologies? Are they achieving the efficiencies that need to achieve, right? So if we just ask these very pragmatic questions, then I think we achieve this sort of synergy between our decarbonization goals and our growth goals, right? That we may find out that they're actually not they're very much complementary to each other.
Thanks, Justin, for serving us such rich food for thought. Now that we are approaching 1 p.m. in Malaysia, which is about lunchtime, I wonder if you have a parting words before we call this session to a close. What would be your key takeaway? We've heard that speaking truth to power is important. We hear about the centrality of Asia in powering on or soldiering on with energy transition. If you can have some wisdom to share with us before you go.
Yeah, maybe again, I think it's just I think it's really important that we keep having this conversation, right? And we keep sort of each other informed, and we have a very sort of one that's based on facts and what we sort of see. I think I'll go back to one of my earlier points to say that, look, I think maybe one of the changes in the last recently in the world is that now Asia has in some ways come to its own when it comes to whether you want to call it climate leadership or setting an agenda on a topic or charting its way, right? In many ways, it was, maybe in the last couple of years, it was watching trends very closely in other parts of the world and trying to respond and trying to follow that. But as we move forward, obviously, I think we still need to keep an eye on the rest of the world and see emerging trends and how things are potentially impacting things. But maybe there is an opportunity, even in this part of the world, to set the agenda in some ways, right? Utilizing what we have. I always said, I think also another advantage of being in Asia is that it's a blank a slate, right? In the sense that there's not a lot of incumbency in some ways. For example, I think one thing that's becoming more obvious is that there's a lot of talk about AI and how we're going to meet all this energy demand. If you really think about it, it is a rather U.S. Centric view. That question itself, or that comment itself, is quite U.S. centric because for many, many years, the U.S. and a number of OECD countries have had negative power demand growth, right? Their power demand was falling 1 or 2% a year. They were not seeing any significant new sources of power demand growth. Suddenly AI comes around and now they're seeing 4%, 5%, 6% annual power demand growth for the next 10 years. And suddenly everybody's saying, oh my goodness, what are we going to do? Are we going to have enough energy, electricity around? There's that sort of, suddenly this sort of deficit sort of mindset. But if you live in Asia, if you lived in Vietnam and China, India, or even Malaysia for that matter, you're used to 3, 4, 5, 6% energy demand growth every single year. That's been the case for the last 10, 20 years. So what's another 10 years on that, right? So, again, so I think it is, I think it's just important to keep that in mind that, we're fundamentally a little bit different in Asia, but that doesn't mean that we're somehow behind in some ways, right? In some ways now, I think we have an opportunity to write that script, and actually our experience could be actually useful for other parts of the world to follow as well.
Very important point in the history of energy transition we are at now. Thank you very much, Mr. Justin Wu, for sharing with us. We are so privileged to have you with us. We wish you a safe trip back to Hong Kong. And on behalf of CGM, we look forward to having you again in one of our panels in the future. Thank you very much and all the best. Thank you.
Thank you very much for having me. Thank you.
Thanks.